Well, I always sort of tell people when in doubt, zoom out. So it's more important to start, I think, with the long-term outlook than the short-term outlook, because short-term tends to be more important for traders and tends to be noise when you have an investment thesis. I believe that Bitcoin, like many are seeing now, is a form of digital gold. It's a store of value and effectively is a hedge against bad behavior by governments and central banks who we know will continue to endlessly print money until there's no value left. It's a deflationary asset, mathematically proven. It's basically superior to gold in every way, shape, and form. And just with the very basic demand and supply dynamics, with the halving every 4 years, the supply of Bitcoin is cut in half. If demand even remains the same, that means that the number will go up. So as you said, I'm very bullish on Bitcoin. I don't really understand how you couldn't be if you understand it and you do the work. And for me, if we're talking about 10, 20 years down the road, I believe it's easily a 7-figure asset. But if zooming in, which is what everybody always wants to hear, what's the price of Bitcoin going to be by the end of the year? What's it going to be in 12 months? First of all, I think it's a bit of a fool's errand to try to attach price gates to price targets, because it doesn't matter if you're an investor. But I would be very surprised if we didn't see Bitcoin in the 6 figures, within the next year. It seems like such a high number. People believe that you're being overly bullish when you talk about it, but the price of Bitcoin right now is 47,000. Basically, if it doubles, it'll almost be 6 figures. And just last year, we saw Bitcoin go from 3,800 to 65,000, right? A 2x move for Bitcoin is effectively nothing.
If you consider that it's a store of value, then you got to ask yourself the philosophical question of why it would need to move that much over the next year or two or even 10 years. Why does it need to rally to 6 or 7 figures? Why can't it just stay at current levels, climb at the pace of inflation, well, let's say, and that'll be sufficient as a store of value for most people, right?
Sure, but if you consider that, I mean, what will be the multiplier on the price of goods in 10 years if governments continue to print money at this rate? Well, 5 times? 10 times, if you're talking about a decade down the road. So even that puts the price of Bitcoin at $470,000 if the price of goods rises that amount, right? Maybe it won't rise that dramatically, but that, like you said, that's even just adjusting for inflation if the price of Bitcoin never goes up. And knowing that Bitcoin is actually deflationary and that supply is being cut in half and that demand is increasing, but even if demand remained the same or only slightly went down, the price should go up. But as for being a store of value, the price cannot stay stable because it has to beat inflation.
Let's talk about short-term price movements, and then we'll talk about utility and some other topics. Short-term, what do you think is the primary driver of price movements?
Well, Bitcoin maximalists will probably think I'm a heretic, but it's traders. A heretic, I guess, would be the term, but it's traders, right? And we saw that the evidence is as clear as it gets. From 60,000 to 50,000, when the price dropped at the beginning of this correction, we saw $10 billion of leverage liquidated. And that was almost 1 million individual traders had their accounts liquidated. You have this small move and then you have this cascade of liquidations because people are over leveraged and it rinses the leverage out of the system. And we saw almost the same thing on the drop from 40 to 30,000. So I think that the amount of leverage being used by retail traders on this asset right now means that there can be very, very dramatic price moves triggered by what would have otherwise perhaps been a smaller price move. I think that Bitcoin is the only free market on the planet, and that if you want to talk about manipulation, take a quick look at the stock market or any other legacy market. We have governments literally printing money to buy the assets to artificially inflate the price of those stocks and assets. It's absolutely absurd. That is the definition of manipulation. It's so funny when I hear about people talking about the Bitcoin market being manipulated. If your definition of manipulation is someone with more money can move the market more than someone with less money, then yes, it's manipulated. And also, by definition, a free market. People get very upset when price goes against them, but they could have very easily been on the other side of that trade. And if one person with a ton of money moves the market, there's a bid on the other side of the order book for every single sale that person put through. It's absolutely a free market. People have the right to put their orders wherever they want. And yes, like any free market, people with more money can move that market.
Before we move back to Bitcoin, I want to ask you, do you believe in the Ethereum flippening? Do you think one day Ethereum will overtake Bitcoin as the largest coin?
I had an interesting guest on my show recently, Rand Neuner, and he made the argument that it already has. That in every metric except for market cap, effectively, Ethereum has already flipped Bitcoin. It's interesting, even if you look at Coinbase's Q2 earnings report, you'll see that Ethereum had higher trading volumes than Bitcoin in the second quarter. It's really interesting. So listen, I don't really care if it flips it or not. I'm bullish on both assets and heavily invested in both. And I think that that's just a narrative that makes for an interesting conversation.
Hmm.
I do not think that Ethereum will flip Bitcoin anytime soon in market cap, but in institutional interest, I think is growing tremendously in Ethereum. Like I said, trading volumes, the actual usage of the network is huge. So I think that there's good reason to be very, very bullish on both of those assets.
Okay, so then let's go back to Bitcoin. Now, you had asked a rhetorical question earlier in the interview. You said, why wouldn't Bitcoin go up any higher? Well, let me give you a fictitious scenario. Suppose most of the developments in cryptocurrencies in terms of technologies and use cases are in the altcoin space, and Bitcoin has pretty much already maxed out in terms of its development. I know that's not true, but suppose going forward that were the case. Well, most of the money, institutional or otherwise, would flow into the altcoin market, wouldn't it? It wouldn't flow necessarily into Bitcoin, which would then be seen as a legacy technology.
I don't necessarily agree with that because I think that the argument for Bitcoin is that digital gold store of value. And so they're
Okay.
completely different investments with different thesis. You ask Michael Saylor that question and he'll tell you that Bitcoin is digital real estate, that it's effectively gold, and it's the only hedge you have against inflation. So if you're going to have an asset in your cash reserve to hedge
Mhm.
against the value loss of your dollars, that's Bitcoin, right? What you're talking about is more akin to investing in the Amazons, Googles, and Facebooks early, getting in on the internet in the early 90s. And I think that that's what you're looking at with Ethereum and altcoins. I think it's a completely different investment thesis, and I think both will get their allocations. But I think
Mhm.
still at the very core, the asset that institutions are going to be most interested in is Bitcoin because it's a proven hedge and store of value.
Okay. So let's talk about your bull case then. You mentioned six-figure Bitcoin and seven-figure. Let's start with six-figure Bitcoin first. What's going to get us there?
I mean, that could happen with just retail. I don't even think that we need a catalyst. I think that just a few more institutional buys and retail FOMO being sort of reinvigorated and we get to six figures. Like I said, it's only a 2x basically from here to 100,000. That's a small move. That's less than the average of Bitcoin's yearly movement upwards, right? I mean, it does better
Yeah.
than 200% every single year. But I'm not, it would be remiss not to admit that if we got another piece of news like an Amazon or a Facebook or a Google putting some Bitcoin into their cash reserve, that would probably reignite the market the same way that the
Sure.
1.5 billion Tesla buy seemingly sent the market flying from around 42K and was the catalyst for the run to 65. So
Mhm.
I think there's plenty of fundamental news that could happen. Another government, another sovereign government like El Salvador adopting Bitcoin as legal tender, central bank adoption. But at the end of the day, and the real key to me to the next major run is probably the approval of an ETF in the United States.
Okay, let's talk about that in just a bit. I want to ask you about well, you mentioned that 2x is really nothing for Bitcoin, and you're right. Historically, Bitcoin has moved a lot more than just 2x. I wonder though, as Bitcoin as an asset class matures as a store of value, that volatility profile will shrink. We're no longer going to see 10x returns in a year, maybe just 8 times, 7 times, 6 times. You know what I mean? Would that
I
happen down
agree.
the line?
Yeah, I agree. I agree that with maturation will become a reduced volatility. And I think that that very ETF that would allow that sort of vol money to come in, or any tool that allows more institutional adoption, will probably decrease volatility over time, sort of as you mentioned. But that's not necessarily a bad thing in my mind because it
Hmm.
just shows that the asset is maturing with time. And I still think it has more disproportionate upside than almost any other asset. But yes, if you're looking for higher risk, higher reward, you definitely can go sort of down the list on coin market cap as we get
Yeah.
into smaller market cap assets and invest your money there. Ethereum as well. I think Ethereum has a lot more upside in price than Bitcoin does, just in sheer terms of percentage gain.
Okay. So let's talk about ETFs then. Why would ETFs drive the price to 7 figures, for example?
Well, I mean, my thinking is that there's a lot of risk managers that have been doing due diligence for 3 or 4 years at the biggest institutions in the world. And we're talking about sovereign wealth funds and endowments and pensions, the real wall of money that you need to put into the asset for it to become that true store of value, even if they put their 1 or 2%, it's just magnitudes of scale right now for how much money would be pouring in the Bitcoin. And we know that they really can't do that without an asset like an ETF. It's very difficult for a pension risk manager to go worry about where to secure these assets after they buy them, even with all these superior custody services that we have now. So to me, it just is sort of the final boss to get that ETF, because it gives them the ability, to sort of wipe their hands of the risk and say, look, we have an asset here that we can easily move in and out of. It's highly liquid. And now we can put our 1 to 5% of our treasury, into this asset. So I think it's absolutely, absolutely huge for that next wall of money to come in. And I do believe that they've been looking at this asset now probably for years.